Good morning, and today is Friday, the last trading day of this week, and it's August 18, 2023. And we are looking at the weekly chart right there. You see, we are in the week of the 33. So 1 year we have 52 weeks, right? But we are at 33 right now. So we have, I think, 19 more weeks. We finish this trading year. So you can see that right here, the stack we have right there. So 8 August 14, right? It's because this week start with August 14. So that's why it's the number right there. The stack we put up there, and so far the range between the high and low is $12.36. But you look at the average range high and low, it's just around $4.80. So this one is about almost 3 times. This is a really outside move right there. So something going on right there. That's one thing I want to point out real quick on the pre-market. And also look at stack for the week of 33. The percentage it go up is only 45. So when we come into this week, we should have a bearish bias right there. We should keep that in mind. And I think we forgot to emphasize that. That's the reason why we keep take long position instead of give the short buyers a more weight, more preference, right? Because based on the stack, the statistic is on the short side. Only 45% is up. So that's one thing I want to point out. And also the second thing we point out in the pre-market, we saw the huge, volume right here. See that? Above 2 million share in the pre-market is a significant, right there. That's the thing I want to point out. Okay, and now look at the daily time frame. Okay, here's the daily time frame, right? You see that? Is the liquidity we on the sell side? We draw this level and it go down below this level right now. Because on the daily chart it doesn't show up, yes, because the daily chart starts at 9:30. But if you look at the 1 minute time frame, you can see it's going down now. You see on the 1 minute time frame, it's go below that level. So that means it go below this level already. So the next thing it may seek is this sell side liquidity right here. Or at least you see the fair value gap right here. The implied fair value gap, it can seek that gap right there, or the sell side liquidity. So that's the next target. Let's see what's the low of this one. 34.41. Alright, it started. You see, wow, it dropped real low right there. Oh man, So it may seek this hit one is order block, right? What the close of this one? 31.44. $31.44. $31.44. Oh no, I mean the open. Open a 32.62. $32.62, right? Is that right? Open, yeah, 32.62 right there. So it's right between this trend right there. You see, that's the fair value gap, implied fair value gap right there. This is the implied fair value gap. Okay, let's see how it looks. Okay, so you have it here. It's down there at this so-called interesting short level on high time frame. And let's see how it's played out, right? We are looking at the 1 minute time frame right there. Let's see how this level play now. This is the so-called retest level right here. Auto block, fellow gap, retest level on high time frame. You see how it bounce right there. And keep in mind that today is 2.2 trillion. Option is expired today, so that's the reason why yesterday it moved very heavily downside. Then we can safely make a conclusion that a lot of people buy call option. When they buy call option, they expect the price to go up. But the market maker, they sell that call to the one who bought it. They will, for the interest, they want to bring the price down, so the option will expire worthless. That's the reason why we see a giant down close candle yesterday. Another interesting thing we see right here, right? So far for this week profile, we saw, on 4 days, from Monday to Thursday, all the candles down close, a candle at 9 and candle at 1 p.m. or 13 hours is down. And yesterday we raised a question whether the Wednesday low is week low. The answer is no, and it did reverse on Thursday is no. So today we will conclude that Tuesday high is week high. It's our weekly profile right there. And we see that the London low buy sell were rated, and previous day sell side were rated That's how we observe the liquidity right now. So here's the London section from 1 to 5 a.m. You see the market open below that. So basically it rate all the buy sell liquidity. London low right there. Okay, now we see what we see from here. We do see that the sell side liquidity were rated. So are we going to go long now? I mean, like with a lesson we learned yesterday, right? If the environment already changed, it's going to be distributed down move, then it's not always correct that you're going to do you're gonna go and go long when you saw the sell side liquidity were rated. But one more thing you can do, that you can target a short move, because the retracement is always there when the sell side liquidity were rated. It always retrace. It always do like that. Then you have to make your short-term target. In this case, your short-term target is just right here, right? Then you can get your target and get out and wait. What you see, if gonna be the retracement gonna turn into reversal or gonna be continued downtrend. But right here you can see that it grabbed the buy side liquidity both sides, so that's a good signal for you that it's gonna move, right? If you don't see it take the buy side liquidity, it's gonna be it make a low right here, then it may turn into a what? A swing high failure, and you see an order block, then boom, it's gonna go down. So that's how the liquidity is working. How the algo is programmed to run and seek liquidity. So if we decide to go in here, then our intermediate target is right here, and we get out of the trade right away. You see another retest right here, failure gap retest, and you can take this as auto block, failure gap retest, you can enter it right here. But as soon as you are in the position, move your stop loss to break even right away, because you want to trade out, right? You know that the pullback right here is guaranteed, but the trick is how deep this pullback gonna be. Then you have to watch carefully where is the buy side liquidity, the closest one that you're gonna get, right? It either can get right here, or you can get this level. So I think we are in a very bullish right now. In the short term, I think it will go back from here. You know why? Because we look at the 1 hour time frame, we can see that okay, let's look at the 1 hour time frame. So you see like yesterday, right? You see right here a big down move for the order block, big down move for the gap, and the retest about boom going down. But today we don't see that setup with down move, and then right here the retracement and boom can continue to go down. Okay, and you can see that it shows you if you go long right here, you have a huge move right here until it reaches a so-called bearish breaker. But yesterday, if you go long in here, I remember we did, which is right at the bearish breaker, which is not good. The closest bearish breaker we have is right here. So it's still the huge move right here. So it makes more sense to go long because it has still a long way to go before it hits so-called bearish breaker. Basically, it's a resistance level right there. Yeah, so you still have the whole, very, you see the buy side, sell side were taken before it hit here. You still have $2 move right there. So whether it's gonna be hit the resistance level and going down, we don't care. We just capture this move. This move is almost guaranteed gonna happen. You see, like yesterday, it's a mistaken for us when we try to go long yesterday right here. It's right in the so-called bearish breaker right there. And the bearish breaker, that is like a resistance level right there. So that's a mistaken for us right there. Yesterday when we took a trade. That's the lesson we learned. So here we see the setup right here, order block, federal gap, free test right there. It take the buy side liquidity, but at the same time, it also do the sell side liquidity trap right here. Buy side liquidity rate and sell side liquidity trap. Let's see. All of this is happening in a support level right here. You see another buy side liquidity rate right there. So the next logic for it trapped the sell side, right? It had to go back and take the sell side. But the next logic right there. However, if something happened right here, it's like a big, player coming and flush markets with a buy order, which it, push all the big up. Then if we observe order sell, order and move it up, well, we find the reason to go long now. You see the smart money diversion right there. Okay, at 9:30, the QQQ make a lower high and the SPY make a lower low. Beautiful. Wow, that's the signal you need to looking for right there. All right, let's take a screenshot right here for our journal right here. So you have every reason to go long right now. Yesterday we go long too early, so today is a perfect day to go long. Smart money technique diversion. 0930, right? The QQQ make a lower high, right? Versus the SPY make a what? Make a high low. You see right there? Yeah, just like that. Wow, you see it? So right here should be our entry. If we spot right there, order block, fabric gap, sell side were taken. It make our requirement right there. If you see that the take it, you have 50% right? But if you let your 50% right, it's run. Your stop quick and small, but your profit gonna be with the 50% rate, you still win, because if you have a ratio like a 1 to 2, as long as above 1 to 2, then you are good. So that's the reason why maybe some people say you don't need a bias at all, as long as you do a good risk management and your win rate 50%, then you're good to go. Because every time you lose $1, for example, but if you win $2, then you always end up winning. 35. So it's a classical setup for us right here. So we're taken, and we see the gap up here. Wow, we see the gap up here. We didn't saw that because we want to see where it's gonna go into, whether we're gonna draw the liquidity, right? You see the gap right there. Surely it's gonna go up there, and it did. Just simple trade, very classics, right? Order block, fair value gap. Retest. And do we have sell-side liquidity rate? We do. Do we have a buy-side liquidity trap? Actually, right here, it take the buy-side liquidity. It's not trap. Not trap. It also take the buy-side liquidity. It trap or it take. Hold on. Let's see. I want to make sure we are captured right here. Yeah. Yes, you don't have the buy-side liquidity trap at all. It take the buy-side liquidity right here. Intermediate term right here. We don't have it. But remember, if we don't have to check every trade right here, that's the gap. It may go up to this level, which is the high time frame bearish breaker right there. Let's see if it hit that level. Okay, let's check this trade. Let's do it and see how it's play out right here. We will do this to see how it's play out, and we can learn from this, right? So right here you can say order block, fair value gap, retest. Okay, and it's a long setup. Sell-side liquidity rate, right? And then normally we want a buy-side liquidity trap, right? But in this case, we notice that also buy-side we also have buy-side liquidity rate. Let's see. Entry time 09:35. Targets is the bearish breaker. High time frame X4. Let's just say X4, 4 hour. Which is this level. And for this trade, we always try to do what? As soon as we are in the money, we move to break even. And also pay attention to this right there. It got, wow. It going down. Wow. Pay attention to this gap right here and go up, fill that gap right there. So far it's hold of this bullish breaker or the support level right here. It hold right there. See it rebound from here, or it's gonna be continue to go down. Let's see, 30. We are in almost 32 minutes in the trading, and let's see, 37. I mean, let's see how it's playing out right now. So we saw it's retested level again. You see that? And very long wick right there, so we can go long a second right here. Wow. Let's do a second entry from here. See, second entry for our long position. Oh, we go long on this one. Yeah. Now close candle right there. Yes. 04 coming down. I go long. Perfect when you go long on a down close candle. So the idea is the same. Order block following up retest, but it's retest twice. And do we have buy side liquidity trap? Yeah, we do. Do we have a sell side liquidity taken? Yeah, we do. So just the same setup, but the second entry right here. Follow up. But this time we have better, right? Retest. Long setup. And we have a sell side taken. Rated. We do right here, rated, right? And also we have a buy side liquidity where we're trapped. So it keep a stronger, signal, bullish signal right there. And the entry time is good at 10:04. And on the Dow close candle. When you go long, you want to go on the Dow close candle. When you go or short, you want to go on the up close candle. The target gonna be the same. Will be a breaker at 4. Let's see how it's play out right here. Where we put our stop loss right here at the favorable, or right here at the an order block right here. Wow. So I believe that I still remain bullish at this moment. Where the bearish? I don't see the bearish. Where the setup for the bearish? Maybe right here, order block, fair value gap, retest. Right, you can see that. This order block right here, huge move down displacement, and there's a gap right here. Let's see how it handle. All right, how it's handle on this gap. Yeah, and it make it a little bit transparent right here, so it will not. Yes, so we can see this one. So we do have a short setup. Well, when you go along, you also pay attention to the short setup. So far this the move, right? So far is this the range that we are at right now. The price is in this range. So let's see. You do have a short position right here, which is short, order block, further gap, displacement, and a retest. At the same time, you also have the order block right here. We have order block right here, a huge further gap, displacement, retest, retest twice. And wow, I think they're good for it to go long. You know why? Oh, we still have the buy side liquidity drop right here, but at the same time we also have a sell side liquidity drop. If you have a sell side liquidity rate, then it's a very good signal to go long. But it's right here, right? You can see that it's a sell side liquidity rate right here, right there. As long as if we could right here, then I believe we're in a good shape. As long as this area will hold, no breaking down, then it's good to go long. But we still have a short. Let it play out. Yeah, it bumped into this support level or the fair value gap. I think I still bullish because look at the 1 hour time frame. You will see the phenomenal right here. Right here's our 1 time frame, right? You see this order block, and then you have a sell side liquidity was taken, and this candle is kind of overshadow this candle. So it's got engulfing candle right there. That gives you a good signal to go along. I will be concerned, or we will be a little bit concerned if this right here go down and break the open of this candle, then we know that it's going to be short. But as soon as it's still above that and it try to check the sell side liquidity in order to go up, then I think we are in good shape right there. So pretty much we are still in long. We have a first entry right here, right? And we put our stop loss just below here, around here. And we still in the trade. And here the second entry for us at 10:03. First entry 9:35, 10:03. Right here, that's the first trade we take right here is a long setup. Second entry, right, the first entry at 9:35 and second entry at 10:04. Right, actually 10:03. It's 10:03. Well, we are into the first 45 minutes of trading day for today. Today is Friday, August 18, 2023. And also a OPEC Friday, which is the option expiration right here, August 18. That's the reason why we see the huge down move yesterday, because I believe that a lot of people buy call expiring, and the market maker want to make the call that they show to other people expire worthless, so they bring the price down. Ooh. Well, first time we see the favorable gap right here. Why it does not show for okay? Because the time frame right, the time window here is where we pay attention to this. We only turn on the favorable gap indicator on this time window from 10 to 11. Wow, it takes a sell side away. You see that? Man, it's very, very smart right there. So if you put your stop loss tight, you got take out. Wow, it take out right there. Let's see if it go below. It take out. We put. Wow, we out. I believe we out. First entry and entry out. We out. Let's take a screenshot right here. So actually this short setup is working. So let's take a screenshot. Basically we got stop out on the long position. Stop loss hit at 10:17. However, if we are smart enough, we will put our entrance right here. We can enter long right here. You put your stop loss below this or around here. Right? Because you know this short gonna go and retest this area. Wow, so our short should be right here, because you see that it make a higher low right there. That means our goal is just go and retest the area before it going up again. So the retest should be retest at order block, not at the fair value gap. That means your stop loss has to be below the order block. Don't do below the fair value gap if you want to stay in the trade. That's the lesson learned for us right there. So this will be our third entry right here. Instead of got stop out. Wow, that's a wonderful thing that we practice and we learn right there. Just the same setup, right? But this case we have what? We have, you see, it does make sense that this one gonna break this one. Because in order to break this one, it have to go up by saying I'll break the one. So this is simply a retest. It's gonna not break down. That's the same setup. But a better position is close to our stop loss, right? And we have a sell-side liquidity. Alright, yeah. And then we have, yeah, we have a clearly, you know, right here. Buy side were trap. And also we see the retest is closed at the 9:30 open. That's another I think around 9:30 open at 09:30 level, right? It gives you another confluence right there. And the entry time this time is 10:17, which is around there. 10:30. Target, which is the same. By liquidity, the barrier breaker at 4 right there. Which is, when it's closed, that means our risk reward will be very high. So it's basically a perfect entry first. Right here, too early, my friend. Right here, too early. Right here, perfect. So patience is pay off. When you're patient, the market always gives you opportunity. Don't feel like you're missing out at all. And the trick for you that you try to enter at the close of your stop loss as possible. I mean, in this case, the safest stop loss is below this low right here, 5 cents below this low. So you want to enter as close as possible. Wow, you see that? Boom, go up. So basically here what we put in our journal. right there. So basically the first two entries is early entry. We have to wait for the best entry as 10 17. We know for sure when we go long in here, we know for sure it's gonna check this buy sell liquidity because it trapped, right? So if we take it, and you see that it did. So our intermediate targets, it hit right there. We get our target. We can get out of the trade here if we want to, because we hit our target. $1 move right there. You see? But this short setup is still valid also. Order block, failure gap, displacement, and now it's a retest of that. So if you short, then it's still valid for you. And you see that it rate the buy sell liquidity. Let's see it go down. But basically we are still in this trend right now. That's the range we are in right now. Let's put some different colors. Yeah, that's the range we are in right now. Well, we have another Look, we have another diversion. Look at that. The QQQ just make a lower low at 10.15 and the SPY make a higher low. Very interesting right there. Right. Let's document this. SPY make a higher low. See that? See that? Right. Let's see how it's play out. Wow, let's go back and retest that. Ooh. So you can treat this as auto block, right? And right here is fair value gap and retest auto block, so nothing wrong. You still stay in your position if you go long. All right, we are 10:30 now. So according to the DR model, we should know what is the high of the day and what's the low of the day. Look at the 5-minute time frame. We have a right here, the dotted line is the DR implied DR high, and the dotted line implied DR low. The DR high, I think it's right here, and DR low right here, and DR high is right here. It's not drawing yet because it wait for the next candle, which is 10:35. So what do you see from here? It's still in the range. You don't have the confirmation whether it go long or up. You see, it's just the price is just move around the mid-range of the DR model right there. But for the 5 minutes, you start see the value gap right here. You don't see any value gap so far, only showing up right here. But the value gap in the down move position direction. So basically right now we have the the range right there. Right now pretty much the liquidity is an imbalance because you have the short position still in play, right? Bearish up, the first right here. Auto block, value gap, retest 1, 2, 3, 1, 2, 3 times, it still hold. At the same time you have a short position right here. Auto block, huge displacement, value gap right there, and retest is still hold. So we would love for this to go down and what? Now this one, but right now we see it build the buy sell liquidity right there. Basically so far it dropped the buy sell liquidity. So all people, short right here, they put their stop loss above here, around here, so it's buy sell liquidity. But the funny thing also, we have the sell side liquidity also drop. They have to break either of them in order to have a meaningful moving to either direction. Otherwise, we're still in a tight range right there. When based on the smart money diversion it feel like it's gonna go up. It have a bullish, direction of buyers right there. How long we stay in this position? Maybe right after 10:30, maybe at 11, or maybe at noon. Let's see. So if we entry right here, the third time we're still in the trade, and if our second entry right here or fourth entry right here and our stop loss below, let's pick the open A30 at a stop loss level, and we still in the trade. However, if we move stop loss or our stop loss right below the fair value gap, we done. We got stop out. Wow. Whoa. So when the retest, hit into the auto block, that's the best retest, right? When the retest hit the fair value gap, it's not the best one. You see, both of them hit the fair value gap, but the third one is, break through fair value gap and stop at auto block right there. So if you want to go long, then the best is wait for the auto block. However, here the trick, sometimes it will never, sometimes it will never test all the way to the auto block. Then you mix the trade. Then it's up to you to make decision. If you go in here, then your stop loss gonna be very big. You have to make that decision that you have to let your trade breathe, right? That means you have to keep a larger stop loss. About 79-cent stop loss right there. But right here, you only have your stop loss is how much? Half of that. So that we have to make a decision. If we're afraid that we may miss opportunity, then you have to give your trade a breathe room and more room to run, or more room to maneuver, to stay in the trade in this case. All right, I think our time is up. Thank you for now, and talk to you later. Bye for now.